Hi everyone, my name is Joseph-Antoine Migdalani. Today I am with Kareem Zakir, our portfolio manager. Welcome to our quarterly web capsule. So today, Kareem, we want to talk about 3 points. Basically, I would like you to give us a little bit of a discussion over what happened for 2025 in the market. I would like also to let us know where do you think we're heading for 2026 as well. And I'm going to finish the video today by talking with the new contribution for the RSPs, TFSA, and FHSA as well, with the new numbers and the new maximum that you can put in these registers account. And before we start, how was your holiday season?
I can sum it up in 3 words: food, food, and food. I had a wonderful time. Between my wife's family and my family, which is pretty big, we had a wonderful period during the holiday season. Everybody's healthy, and that's important to us, important to me personally. And what can I say? It's party after party after party, and by the 2nd of January, we're kind of all like, had enough of it.
But you were able to get some rest at least?
Got some rest, did a lot of reading.
Good.
And some sports, because I love doing sports, my workouts and stuff. So, I had a great time. How about yourself?
Same for me, Kareem. It was pretty quiet with my new daughter. It was our first Christmas with her.
Wow.
Nice. It was pretty special. It was quiet. I read a lot of books, and I came up with a stats that was interesting, and I wanted to share with the people listening to our video. Saying that with the access of buying and selling companies, people are now, when they do their own investments, they're staying in a market with a position for only 5 months because it's so easily tradable that they don't hold the position for that long enough. And we keep on telling our clients that it's important to stay invested for a long period of time, and that's what you do, right?
Yeah.
You select good quality, good businesses that has a lot of potential growth, and we hold these positions. And it's important to say it again that we have to stay invested in the market.
Absolutely. I mean, a lot of people do the DIY thing with investing, and I respect that. But like you said, the holding period for an individual stock is about 5 months on average. And it's often being done by the younger generation.
Right.
And they have a hard time making money. And I often get, I hear about this person got a tip, that person, the neighbor gave me a tip, my brother gave me a tip, my cousin gave me a tip. And at the end of the day, I could tell you from experience, 9 times out of 10, those tips, they don't pan out.
Yeah.
Okay? They don't pan out. That's not the way to approach investing. That's speculative investing. And most often you will not make money, you will lose money during that kind of environment. And I can tell you that a lot of the younger generation has not really seen a strong bear market in their lifetime. Investing is new to them, and with these trading platforms, emotions get in the way of investing. And so my recommendation is always to look at owning individual businesses, whether the cycle is up or down, companies that generate free cash flow, that have good management, that have proven themselves over the last 3 years, 5 years, 10 years.
Right.
This is what we look at. We want to own these businesses, and we want to be shareholders, with the president.
Right.
And I look for businesses actually where management has a significant holding within the business.
Yeah.
Because I want to be on the same side of the table as management.
Yeah.
So this is how we approach investing, in addition to diversifying the portfolio, because there are periods, short-term periods where the markets will fluctuate dramatically, and you want to hold the bonds, and you want to hold precious metals and commodities in general. So
that strategy was pretty beneficial for our clients last year. So
yeah, thank you for mentioning that. So the last year has been very good. Just to give a rundown of our portfolio performances, the conservative portfolio has done over 10%.
Wow.
The balanced has done 11.8, the growth portfolio 13.8, and the max growth portfolio has done 17.5.
Wow.
All after fees.
Yeah.
And by the way, this is our third consecutive double-digit return performance. 3 years in a row.
In a row.
So we're very pleased with that. Actually, over the last 5 years, only 2022 has been the bad year.
Yeah.
So 4 out of the 5 years have been very good for our investors. And expect that in an economic cycle where you'll have one bad year every 5 to 7 years. It's very normal to go through that. I'd also like to mention that at the beginning of 2025, the market started to perform well. And then February to the end of April, the S&P dropped 23% in that period. And at the end of the year, guess what? The market was up 16%. Now, for those who try to time the market, good luck.
Yeah.
Okay? It's very difficult to time the market. When you know what you own, it's easy to absorb the corrections. But when you go on a hunch or on a tip, you don't know what's out there for you. So you tend to react, you sell at the wrong possible time.
Right.
And the sectors that did quite well last year, the biggest beneficiaries were technology, precious metals, base metals, and financial services.
And what are you expecting, and where do you think we're heading in 2026? Are these sectors going to perform as well as they did in 2025, or what do you think?
Nobody has a crystal ball,
Right.
But if I were to look at financial history, which is something I study a lot, 2026 is the second year of the presidential mandate. Usually the second year of a presidential mandate is not a good year for the stock market, okay? So let's call a spade a spade. Doesn't mean you're not going to do well. It's going to be a volatile year. And one of the reasons why the second year of the mandate doesn't do well is because of the midterm elections. It creates a lot of uncertainty. There's a lot of back and forth politically. Everybody's trying to try and gain their positions. They want to win the election, of course, and so a lot of dirt goes flying out. It scares investors. So personally, I expect maybe the first quarter to be okay. The second, third quarter expected to be very bumpy, very volatile. And once the uncertainty is behind us after the midterm election come November, you're probably going to get a rally into end of year. So I'm still expecting a decent year, but with a lot of volatility.
Okay.
Do not abandon the portfolio management strategy. Do not try and time the markets because you're sure to lose.
Right.
Okay?
Yeah.
So the goal is to continue with our strategy. It's done well for us in the past. It should definitely continue to do well into the future.
Absolutely.
The sectors I see doing well going forward, sectors like involve real assets, things you can touch.
Yeah.
So I expect commodities, energy to do well because inflation is becoming a factor longer term. Like I said in my in the previous video that we did, I'm expecting short-term rates to stay where they are or drop a little bit, but long-term rates are going to go up because of the geopolitical instability in the world. Okay, that's one of the main factors. So as long-term rates go up, that means inflation's coming into the system. When inflation comes into the system, you need to own real assets. Okay. Another sector that's probably going to do well is going to be financial services because they tend to perform well when interest rates go higher. I also expect utilities to do well, precious metals, base metals. These are the sectors we're looking to be invested in. So we're readjusting the portfolios accordingly, always looking for those solid businesses. But the key is to be well diversified, to have a bond component, and to have a precious metals component. Makes all the difference in the long term.
It does. Thank you so much, Karim. I'll finish with giving some numbers with the registered accounts. So let's start with the RSPs. So don't forget you have until March 2nd of 2026 to do your contribution for 2025. It's the less of the two amount for your contribution. So it's either 18% of your previous revenue, or it's an amount of $32,490 for the contribution of the RSPs. After that, it's going to go in the TFSAs. The TFSA's contribution limit for 2026 is $7,000 for this year, same thing as 2025. And if you never contributed into a TFSA, you can put up to $109,000 in a TFSA. The FHSA is an interesting account as well to think about, to help maybe a member of the family to purchase a first home residence. Because prices are super expensive now. It's $8,000 for this year for the contribution of 2026.
Tax deductible.
Tax deductible.
You have to mention.
Yeah, absolutely. For a maximum of $40,000.
Right.
I always like to finish our capsule by saying that if you have any friend or member of the family that would like to have a second opinion or a financial plan or review his portfolio, please feel free to reach out. We're going to be more than happy to book a meeting with them. And thank you so much for listening, and we'll talk to you soon.
Bye.